Trade the Stock Market, Part 16. What is a resistance level? A resistance level is the price in which investors find the stock to be expensive. So there is a tendency for investors to sell for profits at around this price level. It's a psychological price ceiling, and you can see it in the chart at the level where the price often reverses direction and goes down. In technical analysis, when the price of a stock is about to touch a resistance level, then that's a good sign to sell that stock for profits. And if the price goes beyond the resistance level, then that's a breakout, and the resistance level now becomes the new support level, and it's a good sign to buy that stock again. That's all for now. We'll talk about price channels in part 17. Learn to trade the stock market, part 17. What is a price channel? A price channel is a pair of parallel trend lines where the price of a stock just bounces up and down between the two lines. Channels may be horizontal, ascending, or descending. In technical analysis, stock traders use the channel to check whether to buy and sell, the same way that they use support and resistance levels as we discussed in part 15 and part 16. The lower line is the support line and the upper line is the resistance. The price channel is drawn manually and it takes practice to draw it correctly. That's all for now. We'll talk about Japanese candlesticks in part 18. Learn to trade the stock market, part 18. What is a Japanese candlestick? In a stock market chart, these are the bars that are usually red and green that look like candlesticks. When the bar is green, then it means the price went up, but when it's red, then the price went down. The black line in the middle is called the wick of the candle and represents the highest and lowest price traded for that period. Candlesticks are helpful in technical analysis because they form patterns that give stock traders signals on where the price will go next. That's all for now. We'll talk about bullish candlestick patterns in part 19. Learn to trade the stock market, part 19. What is a bullish candlestick pattern? A group of candlesticks on the chart will sometimes show patterns that give a clue where the price could go next. If the price is on a downtrend, the appearance of a bullish candlestick pattern could indicate that the price will soon reverse direction and start to go up. There are a lot of bullish candlestick patterns. Some of the popular ones are the bullish engulfing pattern, 3 white soldiers, and the morning star. For example, the price of pure gold has been going down in this chart. Then a morning star and also 3 white soldiers occurred, and then the price went up from there. That's all for now. We'll talk about bearish candlestick patterns in part 20. Learn to trade the stock market, part 20. What is a bearish candlestick pattern? A group of candlesticks on the chart will sometimes show patterns that give a clue where the price could go next. If the price is on an uptrend, the appearance of a bearish candlestick pattern could indicate that the price will soon reverse direction and start to go down. There are a lot of bearish candlestick patterns. Some of the popular ones are the bearish engulfing pattern, 3 black crows, and the evening star. For example, the price of pure gold has been going up in this chart. Then an evening star occurred, and then the price went down from there. That's all for now. We'll talk about the moving average indicator in part 21. Learn to trade the stock market, part 21. What is a moving average? A moving average is a widely used technical indicator that smooths out price trends by filtering out the noise from random short-term price fluctuations. This is the chart of San Miguel, and the blue curvy line is the 50-day moving average. Each point on the blue curvy line is the average of the closing prices of the previous 50 days. The most common applications of moving average are to identify trend direction and to determine support and resistance levels. Moreover, when asset prices cross over their moving averages, It may generate a trading signal for technical traders. That's all for now. We'll talk about the RSI indicator in part 22. Learn to trade the stock market, part 22. What is a relative strength index or RSI? RSI is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price. In this chart of Jollibee, you'll see that when RSI reached overbought levels or when the RSI went above 70, the price went down. The reverse is true. When RSI reached oversold levels or when RSI went below 30, the price then went up. Remember that RSI is not used to predict the trend of the stock, but rather to find a good price level within the trend to buy or sell that stock. That's all for now. We'll talk about fundamental analysis in part 23. Learn to trade the stock market, part 23. What is fundamental analysis? Fundamental analysis is basically the study of a company's business performance. It looks at how profitable it has been and its potential to grow further through the years. Some important numbers that you can look at is the PE ratio of the company, its revenue or income in recent years, and its current assets and liabilities. You can also study their business model, their competitors, the state of the industry they're in, and their plans for the future. The better the data, the more likely that its price will go up in the future. So it's good to buy stocks of companies with great fundamentals. That's all for now. We'll talk about the PE ratio in part 24. Learn to trade the stock market, part 24. What is the PE ratio? PE ratio stands for price to earnings ratio. It's the number you get when you divide the share price to the company's earnings per share or EPS. It's a popular number used in fundamental analysis. For example, if Ayala Land is at 30 pesos per share and the EPS is 1 peso, then the PE ratio is 30 divided by 1 or 30. Meanwhile, if Robinson's Land is at 20 pesos per share and the EPS is 80 centavos, then the PE ratio is 20 divided by 0.8 or 25. In our example, it seems that Ayala Land is a better company because it has a higher PE ratio than Robinson's Land. So, between the two, I'd probably buy Ayala Land. Take note that the PE ratio is not always reliable, and you should only compare companies from the same industry or sector. You cannot compare the PE ratio of Ayala Land, which is a real estate company, against Jollibee, which is a food company. That's all for now. We'll talk about EBITDA in part 25. Learn to trade the stock market, part 25. What is EBITDA? EBITDA stands for earnings before interest, taxes, depreciation, and amortization, and its margins reflect the firm's short-term operational efficiency. Furthermore, the margins are calculated by dividing EBITDA by the total revenue. For instance, if a company made 10 million pesos and spent 7 million pesos, then its EBITDA is 10 minus 7 or 3 million pesos. The margin is then 3 million divided by the total revenue of 10 million, which gives us 30% margin. Comparing margins is useful when choosing which companies to invest in. The higher the margin, the better. That's all for now. We'll talk about conditional orders and price alerts in part 26. Learn to trade the stock market, part 26. Too busy to watch the stock market? Then use conditional orders and price alerts. Conditional orders are instructions that your trading platform will automatically execute once certain conditions are met. For example, if you bought a company at 30 pesos per share, you can set a conditional order of when the price drops to 25 pesos, then your trading platform will automatically sell your shares. This is also called a stop loss order. Another example is if the company is at 45 pesos per share, you can set a conditional order that when the price goes up to 50 pesos, then automatically buy 100 shares of the company. This is also called a buy on breakout order. If you don't want to buy or sell shares, you can also just set up a price alert and you'll receive an email when the shares of a company reach a certain price. That's all for now. We'll talk about fees and taxes in part 27. Learn to trade the stock market, part 27. What are the fees and taxes when you buy and sell stocks? Whether you're buying or selling shares of a company, you'll need to pay fees and taxes for every transaction. You'll pay commission rates, value added tax, BSC transaction fees, PCD fees, and sales tax. Here's a table to know how much you'll pay. Moreover, you can use a trade calculator to easily compute and automatically see at what price should you sell your shares to break even or realize your target profit. Here's what the trade calculator looks like. That's all for now. We'll talk about stock market trading strategies in part 28. Learn to trade the stock market, part 28. How do you do trend following in the stock market? Zoom out a chart, look at the daily and weekly charts, and notice the trend, especially the direction of long-term moving averages such as the MA100. If the trend is up and it's just starting, then it's probably a good time to buy that stock. If the trend is down, then it's probably better to just wait or look for another stock. Always remember that the trend is your friend. That's all for now. We'll talk about bounce play and range trading in part 29. Learn to trade the stock market, part 29. How do you do bounce plays and range trading? Zoom out the chart, look at the daily and weekly charts, and notice where the price is. If the price just bounced on a support level, then it's probably a good time to buy that stock. If the price is near a resistance level, then it's probably a good time to take profits and sell your shares. Review the concept of support, resistance, and price channels in part 15, 16, and 17 to better understand this strategy. That's all for now. We'll talk about peso cost averaging in part 30. Learn to trade the stock market, part 30. What is peso cost averaging? It's an investing strategy where you buy a fixed value of shares of a company at regular intervals. This is normally done on growth and blue chip companies. For example, buying 10,000 pesos worth of Jollibee shares every month or buying 20,000 pesos worth of Ayala Land shares every quarter. Peso cost averaging is a passive investing strategy that doesn't require timing the market because you have a long-term investment horizon. This is good for people who are busy and cannot monitor the stock market every day. That's it, and I hope you enjoyed our Stock Market 101 series.